Ladies and gentlemen, Keiki here. Welcome to the weekly update. Hope you guys had a good day trading today. Market is up by 0.12% there on the S&P. Keep in mind, as I record this video, market should be open for another 2 hours and a half. So I am recording this intraday. So you should be seeing some flashing lights on your left. Nasdaq 0.3% or so. You can see Dow pretty much flat. Semiconductor a little red. Russell 2000's up. Some of these guys are flat there. Biotech is up 1.3%. That's good to see. Retail's up 2%. Some of these guys pretty much flat there. Gold, silver, miners up a little bit. Bitcoin, same. These guys are up. VIX down. And you know what I wanted to do in this weekly update video, we're gonna stick with S&P 500 ETF Spider and the good old Dow Jones Industrial Average. We haven't analyzed them in a while. So in this presentation, this is gonna be the last presentation for the year 2021, right? We're gonna look at kind of what we can expect going into next year, the 2022, right? And we're gonna be looking at obviously also gold and Bitcoin. It is all coming up right now. All right, so keep in mind, there will be, after this video, there will be no video until January 10th, Monday. We're gonna take about a week break after the new year, right? So next entire week, there will be no video. We'll take a 1 week break, limited tweets and stuff, but no video all week. I'll come back after this video. I'll come back January 10th on Monday. We'll kind of reassess that situation at the time. But here, let's look at the S&P 500. First of all, I want to understand S&P 500 ETF, or the S&P 500 as a whole, is up close to 30% this year, 2021. I want you to know that that's a strong year. That's a great year. Every time S&P 500 makes 15 to even 20% is considered a good year. And we're pretty much doubling that this year. And we should be cheering on. We should be, you know what I mean? We should be grateful for this. Yet all I kind of see on these social media streams is that people are not so much happy about that, just because I feel like because they missed out this entire rally, not understanding the long-term picture of things. Keep in mind, S&P is up close to 30%, along with the Nasdaq, right? 30%, despite the fact that we saw very fast reversal after COVID decline, and market rallied very strongly late 2020. Most people doubt that market can't possibly go any higher. And this is how market always falls the majority. Dow did all right. I mean, it's 20%. That's a good year. That's a good year, right? So we had a really good year last couple of years. And I think it's going to be very, very interesting year next year. But market is going to make sure it's going to do the opposite from what majority of people are thinking. So we have to think different than everybody else, right? So quickly here, looking at Spider. We're printing 478.07 today. That's a new all-time high level. Pretty much, it's been grinding here. Some sort of a bull flag or bull pennant type of pattern. There, potential continuation pattern. But I never trust these patterns. They can break out on either direction, I think. So we should not focus too much on what happened last 3 days, but we should focus more on what happened last couple weeks here, right? We talked about that island bottom reversal left. Well, there's a down gap on the left side, and then there's an up gap on the right side. That gap's still open right here, as you can see. That's an island bottom, and ever since then we just went straight up. That's that next day, and then it just kept seeing that follow through. And then last 3 days, this week, we've been seeing slowdown. Obviously, market is going to slow down. Just in case you didn't know, market does not go straight up every single day, and that it's important that you understand this, so you're not really, you know what I mean, detrimentally ill mentally because of what happened last 3 days. And so, you know what I want to do though is I want to look at a big picture, right? Big picture. Obviously here. If we do see any kind of pullback at 472 or so, we talked about that yesterday too, is a level, is going to be level of interest with that support level. There's a gap fill level at 470. So that 473 or 470 area, that's going to all act as that band of support. And that's a prior resistance, as we can see. So prior resistance acting as new support might be the, you know, good play there. Maybe that's what market is setting up. Should there be any kind of decline, but market can also break out to the upside. Keep that in mind. Just because we have so much momentum to the upside that, you know, a lot of people are shorting up here is because people who missed out this move and that they just want to get a little piece of the market. And so they're trying to short this. And if there's a lot of people shorting it here, market is going to make sure to get them out. But keep in mind, though, when the market is consolidating like this, there could be a lot of fake outs. Like market could do this, come down, looks like it's going to break down and then go right back up, or market could go up, looks like it's going to break out and come right back down. So that's why the short-term, micro-term trading is going to be very, very difficult. And that's been the story this entire year. Let's kind of zoom out here and look at the big picture here. So we talked about, you know, something that we talked about a lot early this year, because a lot of people, I mean everyone, when I say a lot of people thought that the market is up too much. We got up too fast. Market's supposed to come right back down. Retest. That's what everybody was saying. But what we're saying was that, hey, you know what? Market is, you know, establishing that pivot, right? You can see how for the, you know, early part of this year, you can see it is not a coincidence. It is not a mistake. It is not a random occurrence. The market decides to find supports in that vicinity. That's a prior resistance acting as new support, which I call it a pivot. And you can see my my midterm moving average, that pink dotted moving average here. You can see it's been acting as support here. And then all throughout that move, coinciding with a rising pivot. And this rising pivot is going to be important because when I cover Dow, I want you to remember this picture right here, what it looks like right now, right? I want you to remember this. Take a mental photograph here, because when I go to Dow, it's going to look very similar, and maybe Dow is, you know, following its brother's footstep, S&P 500 footstep. So when I go to Dow, you'll see it. But right now, looking at Spider, so with that, and that's what happened. See, that's the 2021 move, and that has been that pivotal low. And you know, the thing about that is, market makes sure these are very shallow lows, because the market makes sure that you thought this thing can't possibly go any higher, and it was due for some kind of a bigger correction. Well, market makes sure that you cannot come back in. That was the whole point of these shallow pullbacks. And this was especially after Biden was, you know, selected as the president of United States at that time. And a lot of people thought, hey, you know, Biden gets elected, you know, tax reform, and this thing is going to crash back down. And well, we didn't. It just kept going higher. And you can see we're 27%. Do not forget, that's a great year. Everybody's got really like spoiled in the market these days just because they see these like these COVID stocks, man. They did 300-400%. Tesla went up crazy. The Bitcoin, all these people, you know what I'm saying? YOLOing every day, gambling in the market, not understanding this is a great number. This is a strong, great market. Chasing after crazy things, and that's how you're gonna face crazy things in your portfolio, right? 27%, close to 30% on the S&P, strong year. So what I can say going into next year is that, first of all, I want to, in the primary term, I want to continue to give benefit of the doubt to the buyers. I actually do think there's a potentially correction coming next year sometime, maybe, you know, after the first quarter. If we do see a correction coming, it could be 15 to 30%, minimum 12%, I think, but 12% to not 30%. Did I say 30? Somebody got a heart attack. No, 20% minimum. I think the worst case there, maybe 22, but like I'm thinking 12 to 20 or so if we do see corrections. But I kind of leaning towards this market. Looks like, you know, looking like Russell 2000 next year, meaning, you know, if you look at Russell 2000 been grinding sideways, consolidating the entire year. If you just go to Russell 2000, go to your daily chart, you'll see it. Market as well, because Russell 2000 seen a huge rallies late last year. So it's needed to kind of cool down. And so entire year, Russell 2000 just been kind of cooling down, moving sideways, correcting through time. That's a scenario that we could see on the S&P 500 next year, meaning this could go up and then start doing this for the entire year or something like that, consolidating, right, going up and down. So we don't have to see a correction. I think that's a likely scenario, but I think, just because of the way the market has been moving, just because there's so pessimistic ideology about the market this year, and nobody's happy about this move, right? I wonder if market can see that so many people are, waiting for the big correction. I wonder market might not give it to them. Maybe we continue in this lethargic. We may not see 27% next year, but maybe 15% move. But it's like a lethargic up and down with like minimal corrections, like maybe 7%, 5%, 7%, maybe even, you know what I mean? Maybe like 10% or so. But then it like, you know what I'm saying? I think that's on the, so I think there's there's like maybe 35% chance, I can see maybe 35 to 40% chance, but there's a more likely sideways or higher chance. But like there's about 35% chance to maybe 39 or so that we may see a real correction, which is 10, 15%, or maybe even close to 20%, which I believe is going to be a tremendous opportunity if we do see that. So that's kind of my forecast. So this is, you might wonder, so how are you going to prepare for that? Well, I'm going to be long. I'm not going cash. So the way I'm going to prepare for this is that as the market goes up higher and positions that I've been holding last couple of years, if some positions got pretty extended, I'm going to start closing them out. Not all of them, maybe close half, third, or something like that. Take some off and prepare to go through the corrections. Not avoid the correction, but go through it and then buy more when the opportunity arises. And I think that's the best case scenario. That's the best way to prepare for that, because more money has been lost from investors to prepare for corrections than corrections themselves. What he's saying is, so many people, it's like they go cash, right? Because they want to extract every cent from it. They want to clip every coupons from the market. And this is a poverty mentality. With the poverty mentality, you will go broke. And so all these people like, I don't want to go through any corrections. So what I'm going to do is I'm going to go cash. I'm going to wait for the correction and I'm going to rebuy and then write it up. Well, that's what they all said late last year and early this year. And then they missed out this entire thing. So do not make same mistakes again, right? This was trading at 320 when people thought it's going to come down. Well, it's 480. 480. That's how people lose money. And not only they lose money, they miss opportunities. So you also have to account for missed out opportunities. That's a double loss. Think about that. Let's go to Dow Jones Industrial Average. Good old Dow. We haven't talked about Dow in a while. So again, let's zoom in here. Definitely, this is a more textbook island bottom reversal, not like S&P. This one is a fully, like, you can see gap down, gap up. There's a big gap here. That's a full blown, island bottom reversal with that, what is that? Dragonfly Doji there, right? And we gapped up and we just been going up every single day. And you can see how it's even stronger. Like last 3 days, Dow looks stronger than Spider, because you can see on the Spider, it's like moving sideways, right? You can see right here, it's like sideways. On the Dow, it's kind of sideways, but it's going up. I mean, it's grindy, but it's going up, right? Why is that? You see that it's going up while Spider's going sideways. Well, this, you see that here? It's a stronger island bottom reversal. Yeah, I'll go back to Spider and show you guys. You can see that Spider. You see that lower wick here. So you see that because of this lower wick, that gap only opened up, or it's got filled. Like 70% of that gap was filled. You see that? So that move, it's, with a little bit of that gap, not fully acting as island bottom reversal, you can see we start kind of, and I think that's the reason why there's a little bit more upside push here last 3 days, because this is a full on island bottom. There's a gap here. There's a gap here. and that we continue to make a move. S&P or the Dow is close to 20%. That's a good year. Dow Jones Industrial Average is making a good. But do you guys remember that pivot I talked about? I told you guys take a mental photograph. Well, here's what I'm saying. This is what I mean. Remember what we talked about on the S&P, earlier this year? Well, that same thing is occurring right now on the Dow. And this is kind of one of the reasons when I see this on the Russell 2000 also, this is why I think if the Dow, some of these laggers decided they're going to make a move, because they haven't been making them. Like Dow hasn't been making a move. Russell 2000 hasn't been making a move. So I wonder there's going to be sector rotation occurring so that Dow and you see Russell 2000, pharmaceuticals, you also see like biotech, and so maybe it's utilities, and some of these laggers start to make a move to the upside. And if we do see something like that, we could see this market prop up. So instead of seeing S&P 500 seeing actual like 25, some crazy like 20, like 15% correction next year, we could see S&P, the Nasdaq, and the semiconductors to kind of slow down, correct through time, right, sideways, while the Dow and the Russell 2000 actually make a move. And if we do see that happening, this entire market can be propped up without a real correction. I'm talking, when I say real correction, I mean 15 to 20%. So that's what this is important. That's why I chose to talk about Dow today, because this is important. Again, here, if you already forgot, here, I'll go back. Right there, right? You see this? So if Dow is going to fulfill what S&P 500 has already done early this year, then if Dow is ready to do that, then I think the entire market can be propped up as the rising pivot is at work, right? You can see that, right? And we need to stay above that, right? It looks like it's been doing that, though. You can see a very nice right here, very quick support and resistance, right? The resistance support, boom, boom, and it hit it here in like August, September and stuff. And then like November, October here, and then we making a move going after new all-time highs. And in that process, you can see these subtle higher lows. You see these subtle higher lows and subtle higher highs. And there's a message in that, right? These subtle higher lows and higher highs telling us that it's not coming all the way down to the lows. It kind of stops short and cultivate that higher low, right? That low is definitely slightly higher than this one. That low is slightly higher than that. The reason is because there are more buyers there anxiously buying the dip. They're not letting it like coming down all the way. Nobody's really completely getting out their positions. That's why we see these kind of consolidations. These are like a short-term kind of type of movement. So I'm looking at this market overall. I mean, I actually went through all the indices today for my members, and as I looked at all the indices and just kind of recap everything and just see how this market played out, this year and last year, and then looking into next year, there's so many people have missed out on rallies, missed out on bullish moves, and so many people are expecting, wanting to see. They think it can't possibly go anywhere. Remember what I said? Laws of physics do not apply in the market. Market can and is able to do the unthinkable. So more people think that this market can't possibly go any higher. It will go higher. So, but at the same time, is this market extended? Yes. At the same time, we have to understand there could be a correction. So you can't try to choose one, because none of us can see the future. What we have to is we have to keep in mind that, okay, we're on an uptrend primary term, so we want to continue to give benefit of the doubt. So at the same time, though, I want to, position myself in a way that I want to keep riding if it does keep going higher. But at the same time, if we do see a pullback, I have to learn and how to go through it and then prepare to buy more when that opportunity arises. So I think that's the best way to prepare for 2022. So if you're a long-term investor, the best way to be positioned going into next year is that you've been long-term investors since COVID through 2020, 2021, and this year you've been buying the dips, accumulating value stocks, not chasing stupid stocks. People who chase these COVID stocks, DocuSign, Peloton, PayPal, Zillow, T-Dog, Chewy, all these crazy stocks just went up straight up. They all crashed down this year. So don't ever chase stocks, but find value. stocks that are, in low value stocks that people are very scared of, very fearful. And, if you've been accumulating those and, there's their gains there, what you do is you hold through up and downs. But, if a lot of my bank stocks, because I got into a lot of my bank stocks in COVID lows when we saw these, when we saw that big decline, and a lot of those stocks are up a lot. Goldman Sachs, Capital One, like Bank of America, JP Morgan, a lot of those stocks. So I started to close like some of them, like half holdings and stuff, like just so that, I hold half, but close half. That way, if we do see a correction, I can maybe buy more, but if it keeps going higher, I want to ride it. So that's kind of what I'm saying going into next year. So let's continue to give benefit of the doubt to the buyers going into 2022, right? And continue to stick with the long-term outlook and not get too intimate with the short-term fluctuations. I think you do well next year, and obviously we'll kind of revisit the market and see how the market is playing out. And gold here is still same thing, which we've been talking about for the last several months. It's still been been bound by this resistance here, and it looks like to me it's consolidating before this can actually kind of break out. But the best case scenario you want to see if you're a buyer here is that you want to see that prior resistance acting as new support and cultivating its own higher high. We haven't seen any higher highs. If we see higher low, I think that then gold silver is ready. Let's go to Bitcoin. I'll end the video with this. Bitcoin continued to struggle here. Looks like it got up and filled this gap, but problem was that we've opened up another down gap. You see, so we can see with these gaps here, man. And that's the thing, is that that down gap was never filled, and things getting hectic here. And you don't talk about double top. This kind of looks like it, but we can't confirm that until this thing breaks the neckline. This is the neckline. So still, we can't say that's a double top until it breaks the neckline. Not only breaking the neckline is important, it needs to break below it, and then it needs to cultivate the lower high, and then come down to fully confirm that double top. So we can't say double top yet. We might have double top formation, but it's not confirmed as far as a double top, like a reversal pattern. But we still have this, up gap. These gaps going to provide some support. So we're just kind of in the middle of nowhere. It's difficult to go long here, difficult to short here. We're just kind of like, what's going to happen is probably the best approach is just kind of see how the market is. We do have these subtle higher lows, so that's probably the best if bulls can get up and fill these gaps there. Well, keep in mind, I'm going to be gone all next week. I'm going to come back for you January 10th, right? So there will be no video next week, all next week. And so I'll be back January 10th. My 2021 December invitation, which I'm running additional 20% off on annual memberships. It's going to be expiring in 3 days, which is going to be Sunday evening time. And probably not going to have any other promotion for a while. And then probably the enrollment process we're probably going to close down the enrollment process afterwards, after about a month later or something like that. But so this will be the last time to get in with special rate for coming for 2022. So think about it and see if you've been thinking about joining the Traders Club, and definitely utilize it and take advantage of it. But hey, you know what? I want to thank all of you for following my tweets and videos, and letting me serve you through these videos. I want to wish you and your family Happy New Year, and I'm gonna come back for you. Right? I'm gonna come back for you on January 10th. We're gonna reassess the situation. And good luck trading next week.